Today we're going to be talking about open low high close and open high low close. So here are some illustration of open low high close here. So this big bullish candle over here might be the daily candle or the weekly candle. So here, this structure over here might be your 5 minutes, 30 minutes, 15 minutes for your entry models and all of that. So here, the daily candle actually opens here on this segment outlined O. Here, opens here, then goes below the opening price. Then you got your turtle soup. Buy low, there's the low of the daily candle, buy low. Then expands higher, then creates a retracement into maybe a breaker block or a mitigation block. Then second leg of expansion. Then you get your kiss of death turtle soup here before expanding towards your anticipated draw on liquidity higher. Then you get your high, then you get a little retracement downward, then you get your close. So let me just summarize all what I just said. So what I basically mean is that you just have to actually buy below the midnight open price on a bullish day. Here, this place outlined O is your open, and this will be your time zone, will be your midnight opening price. So the market opens, goes down, turtle soup, you got your daily low, open low, rallies, retracements. This might come back into a mitigation block or a breaker block. Then you get your first leg of expansion. Then second leg of expansion, you get your kiss of the turtle soup. Then before going higher, and you get your high, then the daily candle close. So that's for open low high close. Let's go to open high. This is high actually. Open high low close. This is H. Okay. Open high low close. So this might be the daily candle, weekly candle, this big black bulky candle, which is the bearish candle. This might be the daily candle, the weekly candle, the monthly candle. Open high low close can be applied on all higher time frame candles. That's daily, 1 hour, 4 hour, and all of that. So here you get your opening price here, open, then turtle soup. You got your daily high. You have to enter above the opening price here. As you can see outlined here, entry zone. Enter above the open high. Got your high, sell high. Then here, maybe a retracement into a breaker block or another block which has already swept liquidity. Then you got your first leg of expansion here. Then you got your second leg of expansion. Then you got your case of the turtle soup, final turtle soup before the drawn liquidity is meant. Then here, towards your anticipated drawn liquidity. Then you got your low. Then you got your daily candle close over here. So that's for open high low close. So let's go. I'm coming. Let me take a screenshot of this. Okay. So let's go into the live chat. So here I'll be outlining the daily opens of this chart over here. Okay, good here. So you can see this black horizontal line. So this was the daily open, and you can see the time zone. That's 0000. That's your daily. That's your time for your daily open candle. So here you mark out your daily open candle. Let me mark this out. So marking this out here. So you got your daily opening price. So what actually happens? The market went higher, retraced above the opening price here, retraced, then went higher and took some drawn liquidity over here. On the 4-hour time frame, you can see what actually happened clearly. You got a 4-hour rejection block. You got your 4-hour rejection block over here, and you got your mitigation block also, where here, let me just say here, I wanted to use the body, but let me just use the wick. So you got your 4-hour mitigation block, and you got your rejection block also, and you got your CRT high and CRT low. Let me turn this off so you guys can get a clear view of what I'm saying. So you got your CRT high and your CRT low, and this is your opening price. So the market actually manipulated into this key level, your mitigation block over here, or a breakout block, anyone you call it, and you got your rejection block. So going down to the 30-minute time frame or the 15-minute time frame. So here, let me put this key level, and this is actually also a key level, this rejection block over here, and this is your CRT low. So, and here is your turtle soup. So, and this is your opening price. Let me just say opening price. So here the market manipulated above this key level into this rejection block, then displays lower, which actually happened during a key time. This turtle soup happened during a key time. You got your first turtle soup, and you got your retracement into this other block, then before expanding higher towards this London session low. That's your draw on liquidity. Remember, I told you session highs and low can also be used as draw on liquidity. So this was London sessions low, and this will be my draw on liquidity during this whole bearish momentum. So let me outline this again. So you got your open here, open price, this line here, open high, then let's look for our low, because this daily candle is yet to close. So here you got your open low, this is your low over here, low, then you got your close here. So you can actually sell above the opening price and also buy below the opening price. Remember, every move starts and ends with turtle soup. Every exit is an entry and every entry is an exit. You got your turtle soup and you got your order block retracement here. Then before going higher and closing here. Well, I will choose selling over here and taking my profit here, then actually buying here, because we need to actually sell high. So that's that for this price action. Let's go on to the next price action. So over here, this was Monday and you got your opening price. So you outline your opening price. So here is your opening price over here. Oh, let me use this color. Yeah, this is good. So you got your opening price and you got your key level as well. Sorry. Daily key level. 4-hour key level. Why is this my key level? Because this order block actually swept liquidity and is a high probability order block. So this key level, and you got your opening price. So the market actually manipulated down and tapped on this key level, then expanded higher. So let's go to the lower time frame. Turning this back on, still the same opening price, key level. So you got your O and got your low, open low. So you're to buy low, and this is a high probability to the soup. Why? Because of this 4-hour key level. So buy below the daily opening price here. And if you look to your left, you got your low resistance liquidity run, and you also got your previous day high, which can also be used as your draw on liquidity, and you can still target higher prices. This would be Thursday's high, previous day high. So here you got your expansion towards your anticipated draw on liquidity over here. So got our open low. Let's look for a high in our close. So here you go. This is the end of the daily candle. So here, open, low, high, and you got your close over here. So on a bullish day, buy below the opening price, buy low, and on a bearish day, sell above the opening price, sell high. So let's go forward. So let me use these price actions over here. So you can see here during this price action here, the market opened here with this move, open, high, open high, low. You got your low over here and you got your close over here. So I've actually just shown you guys the daily open, high, low, close. Sorry, I haven't actually gone to the daily time frame. I guess I'll have to delete these drawings. Okay. So over here on the daily time frame, let me use this side of the chart. So here you got your opening price of the daily candle. So you have to sell above the opening price, so you got your sell zone. And also here you got your sell zone. So let me say you want to determine the daily bias. You can see here it's actually bearish. Wick above, close back into the range, lower prices. So here is your range low, close below this candle range low, lower prices. Closing below here, lower prices. So back to our open, high, low, close. So here we have outlined our buy zone. So let's go down to lower time frame. Let me use the 1 hour time frame. So here we have to sell above the opening price. So here the market actually went higher and you got your total soup. And we are waiting our buy zone. And also here you got your total soup and your lower time frame or the block. Let's go to the 30-minute time frame. So here, total soup, and also here, total soup. Then crashes. Total soup, crashes. So that's how you use the open, high, low, close with the daily time frame. So let me give you guys an example of the weekly time frame open, high, low, close. So here I'll be using, let me see, this week's price action. Okay. So here we have to buy below the weekly's open low. Here weekly is open low. So here you got your buy zones over here. So let's go to the lower time frame. So you got your buy zone here. So where is the weekly open price? Here, Monday over here. This is your weekly opening price. And So what actually happens Monday? The weekly candle opens and swept this drawn liquidity over here. That was your previous week's low. Swept this drawn liquidity with Monday's move. So after sweeping the drawn liquidity, Tuesday, remember you to buy below the opening price. This is Tuesday's daily open as well. Here is Monday's daily open and the weekly open. So Monday's daily open here, the market went higher, open high, you got your high, then expansion, then you got your low, then you got your close. Then Tuesday you got your open, low, then you got your high over here, then you got your close. That's for the daily open, high, low, close. So here we got our weekly open. So Tuesday swept Monday's low, and you got your total soup. So we had to buy low, and you got our 1 hour CRT low, which was swept, and our CRT high, which was actually used as a key level for expansion for higher prices. Expansion towards where our previous day high as our first draw on liquidity. So here we got an SMT with EURUSD actually below our weekly opening price and our daily opening price. So what actually happens? This was Wednesday's price action. Open price low, then expansion, second leg of expansion, then towards our second draw on liquidity, which is the previous day high over here, and after taking that out, we got our close. So open, low, high, and close. Same thing here. Daily candles opens with this move. Then here you got your low, then you got your high, and you got your close over here. So we got a total soup, which is our kiss of death total soup, the last total soup before the final draw on liquidity is meant from the illustration I actually gave before coming into the chart. So I'm just using the weekly open, high, low, close as an example. So here you got your daily candle open, high, low, close. Daily candle opens, you got your low, buy low, then you got your high over here, sweeping our final draw on liquidity, and you got your high over here, then you got your close for Thursday's price action. So let me just outline the weekly high, low, close. So the weekly candle actually closes on Friday. Yeah. So here. So you got your open on Monday. Let me use this. Open, low, got your high, and you got your close. As for the weekly opens, the market opens, goes below the opening price. You got your low, buy low, then here retracement into what your mitigation or breaker block or other block. Then that's your first leg of expansion. Second leg of expansion, your kiss of death, turtle soup towards your final drawn liquidity here. Then here you got your high and your close. So open, high, low, close can actually be used on any time frame, any higher time frame. That's from the 1 hour, 4 hour, and remember when you're using open, high, low, close, use the time frame alignment as well. So it can be used on the 1 hour, 4 hour, and daily, monthly, weekly, and also yearly. So let me use another example for the 4 hour open, high, low, close. Let me use this example over here. So here, remember we have to buy below the opening price. So this 4 hour candle over here, that's what I'm gonna use. Something you should know, every candle gives new opportunities. So here you got your open, and this is your 4 hour opening price, and you got your liquidity. Monday's low, which was swept by Tuesday, and going from the 4 hour time frame to the 15-minute time frame. So here, buying low of those 4 hour open, high, low, close, and on the buy zone, you can take your buy here after sweeping this previous day's low. You can take your total soup buy here, and you can target all these low resistance liquidity run over here. And you got a second opportunity as well. This was another total soup, which actually happens at the beginning of a new hourly open. So that's how you use the 4 hour open, high, low, close. And it can also be used on the 1 hour as well. So let me say this open and low of this 4 hour candle. Let me go back and down to the 15-minute time frame. So here you got your 4 hour open here, and we are within the buy zone actually of the 4 hour candle. Here is the buy zone of the 4 hour candle. So we have to buy low when everyone is scared to buy. So you buy low, and you got your expansion. Low resistance liquidity run, drawn liquidity first, second here, and your last here. So that's how you use the 4-hour open, high, low, close. And you can also use it on the 1-hour time frame as well. So that will be all for today.